Good morning, viewers. It's Wednesday morning, March 26, 2025, and I'm your host, Sunil Thakker, Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. US stocks edged higher on Tuesday with hopes for a moderate outcome on tariffs, outweighing another drop in consumer sentiment data. Wall Street stocks ended higher on Tuesday as investors assessed consumer sentiment data and bet on a more flexible trade policy stance from the Trump administration next week. Major indexes swung between small gains and losses throughout the session before late session gains pulled the S&P 500 up 0.16% to end the session at 5,776 points. The tech-heavy Nasdaq gained 0.46% to 18,272 points, while the Dow Jones Industrial Average rose 0.01% or merely 4 points to 42,587 points. The S&P 500 is down about 2% so far in 2025, and it is on track for its first quarterly loss since June 2023. Worries about tariffs have weighed on share prices this year, but markets have calmed of late, with stocks rallying Monday following reports that the tariffs expected in April could be more narrowly targeted than some had expected. President Trump is expected to announce major new tariffs on April 2, building off previous levies that he has already imposed on the country's largest trading partners. US President Donald Trump said on Monday that automobile tariffs were coming soon, while suggesting that not all proposed tariffs would be enforced in an April 2 announcement on which Wall Street is focused. Investors are generally hopeful that the US economy can extend its expansion this year, a view reinforced in recent weeks by a run of solid reports on the labor market and consumer spending. Still, so-called soft data has been less encouraging, showing declines in consumer and business sentiment. A slide in consumer confidence to a 4-year low weighed on sentiment. In the latest of those, the Conference Board reported on Tuesday that its consumer confidence index fell around 7 points to 92.9 in March, its lowest since February 2021. This is a slightly bigger drop than economists had expected and a drag on stocks. Forward-looking expectations for income, business, and labor market conditions dropped to the lowest level in 12 years. The data yesterday added evidence to the case that the economy has cooled from the torrid pace of consumer-driven growth for the last 18 months. Thus, some kind of pullback was inevitable, though souring sentiment may lead to a steeper slowdown than anticipated. Ratings agency Moody's said on Tuesday that the United States fiscal strength is on track for a continued multi-year decline as budget deficits widen and debt becomes less affordable. On of the 11 S&P 500 sector indexes, 7 rose, led by communication services up 1.43%, followed by a 0.98% gain in consumer discretionary. Among individual stocks, Apple rose 1.4%, helping keep the Nasdaq in positive territory, while Nvidia slid 0.6%. New data showed Tesla sales plunged 47% in the European Union in February. Tesla shares still rose 3.5%, adding to the 12% rally the previous day. The company's market share in Europe continued to shrink in February as sales of the all-electric car maker dropped for a second month, even as EV registrations overall on the continent grew. CrowdStrike gained 3.3% after brokerage BTIG raised its rating on the cybersecurity company to buy from neutral. KB Home fell over 6% after the home builder cut its full year 2025 revenue forecast. International Paper rose 6.5% after targeting a jump in earnings. A 3.1% decline in Walmart shares weighed on the Dow Industrials. Treasury yields slipped after getting a big lift on Monday from the uptick in economic optimism. The yield on the 10-year note settled at 4.31%. The dollar spot index fell 0.1%. Bitcoin rose 0.4% to $88,231. West Texas Intermediate crude fell 0.2% at $69 a barrel. And spot gold rose 0.3% to $3,019 an ounce. Among a cascade of economic indicators scheduled this week, focus will be on the personal consumption expenditures price index, the Fed's preferred inflation gauge due on Friday. Confidence is a fragile thing. Despite the ever increasing roles of algorithms and artificial intelligence in the investment process, emotions still play an important role in market behavior. Fear and greed still rule, and a constant tug of war has been on full display in both the market and the economy recently. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I'll see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.